With us is Mike Bucella, general partner at BlockTower. Mike, welcome back. Good to see you.
Good to see you as well.
Let's start with the basic building blocks here. What would the sanctioning of a Bitcoin futures ETF mean to the price of Bitcoin, to the underlying asset? What would it do?
So it would obviously be bullish. So what you would have in the futures product is a natural bid for the front month contract that would create arbitrage. People would buy the spot market. What we really think, I think what people look forward to is a spot market ETF, which is likely next in line after the futures ETF comes into play, where they're actually going out and buying spot market Bitcoin. So the futures role, as you mentioned earlier, Bob Pisani mentioned earlier, does come with its issues. So we have the same issues with other commodities ETFs where they're rolling the contract each month. It creates a decay on price performance and is a pretty poor tracker generally for the underlier. So, it's exciting. It's an exciting moment. It will certainly bring a lot of capital into the market. It creates a opportunity for things like mutual funds, retirement plans to invest. But the reality is, I think the ultimate goal is for a spot market ETF.
Yeah, which would be basically based on the underlying asset, the Bitcoin itself. So let me ask you this. If you're going into something that is a derivative, it's basically you're buying an ETF of a derivative, what percentage of Bitcoin's gain or loss are you likely to receive as return in a Bitcoin futures ETF? You see what I'm asking?
Yeah, and so that's a fluid question. So you can look back at things like UNG, which is the natural gas ETF that rolled, and you could look at tracking error based upon the underlier of that ETF. Mm-hmm. It's a market maker's dream. Prop desks around the world are going to take advantage of the role and take advantage of certain market dislocations that occur because of the structure of really taking a 24/7 traded asset. Now, the future obviously doesn't trade 24/7, but a 24/7 traded asset and isolating it to market hours. It's going to create a lot of volatility within I think crypto or Bitcoin price, but I do think it'll be a net positive. So, we'll see what comes of it. I think this is really the last 24 hours are really an extension of the price performance from late September when Gensler first came out positive on a Bitcoin ETF. Mm-hmm. That was mostly an accumulation phase. We're up 40% from there. I think real money was buying. We saw CME basis blow out, which is an indicator of regulated funds buying. The last 24 hours has been primarily derivatives led. So a lot of levered traders playing this headline. So it's going to be a volatile few days heading into these approvals or rejections. Obviously, the consensus right now is approval, but we'll see.
Mike, what do you think is going to happen broadly? Let's just assume approval. There's a raft of Bitcoin futures ETFs that come to market. What does that ultimately mean for demand for Bitcoin? It has to raise it, even if it's synthetically.
Yeah, so a few different things. One, it means regulators are on board. That's a very, very important takeaway from this entire process. So I think there's actually regulation and macro are two very critical things to focus on. So regulation, getting ETF approved, moving towards a spot ETF. Also, we saw something this morning that got very little attention, which was a CFTC settlement with Tether and Bitfinex for $42.5 million. Kraken previously was $1.25 million. These are slaps on the wrist, which means they're saying to these companies, work with us. You're going to have to pay for your past discrepancies, but work with us today and we can move forward together. That's a very, very big piece of news that I think has been underreported today. The other part is the macro backdrop. It's extremely attractive for Bitcoin. I mean, if you look at, we're in an inflationary cycle. Growth stocks, the commodities complex, you have energy, industrial metals like copper, tungsten cubes, everything is off the charts. This is obviously a great time for Bitcoin. And at the exact same time, look today, gold is underperforming the market. Gold is actually down in the day. Gold is down 10% on the year. So Bitcoin's inflation narrative is picking up as gold is breaking down. So it's a pretty important thing to note.
So let me conclude with this. I mean, I think of Bitcoin in two ways. Half the time I'm sitting there going, God, I wish I had some. And then half the time I'm thinking, God, I'm glad I don't have any. But I think of futures, and I think that futures are a pretty volatile asset. They sometimes they're like a coiled spring. If I lay a futures on top of a derivative, futures derivative on top of an already volatile asset, how much more volatile is an ETF comprised of futures likely to be than the underlying asset?
I mean, the reality is derivatives have inherent leverage, right? The one-day out call options on BTC are trading at 200 implied volatility right now. Derivatives are a natural point of leverage. They're obviously a hedging mechanism, but when you have an underlier that settles at around 70 to 80 vol, you don't need leverage. So if you want to buy, Now, if you really want to own Bitcoin, take what you wouldn't be concerned about losing, go out and buy half. That way your anxiety of owning it or not owning it is gone. And over the next 3 years, dollar cost average in the second half of that. That's what I tell my family. That's what I tell my friends. That's what I'm telling you. It's the best way to approach investing, because the reality is Bitcoin is a macro asset. Crypto is a technology. They're foundational. They're foundational and pervasive across industry, across economic and monetary policy. It doesn't have to be a binary. It doesn't have to be a yes, no. It's a spectrum. So you can allow yourself to sort of blend into that spectrum. You could say, I don't believe in it, so I'll put in 50 basis points, or I do, and I'll put in 10%. That's kind of the way that I think about it for most people that are outside of the industry.